Today, all eyes are on the Supreme Court and its decision. Are customs tariffs illegal? We're going to talk about it in this daily update, but above all, we'll take a look back at what happened in the past few hours. Because as we discussed yesterday, the market moved very quickly with just a simple return to neutrality, and it didn't waste any time. Because in just 24 hours, you can see here the market trend over the past few hours. In the span of 24 hours, we've returned to a neutral position in terms of the crypto fear and greed index at around 61. So this is the first time since the crash in October, on October 10th, and that says a lot about how quickly investor confidence is coming back. And precisely throughout this daily update, we're going to analyze the factors that explain this rather quick turnaround, especially in terms of sentiment. But we have to keep in mind, because a return of confidence doesn't mean you should rush into everything that moves, especially since we're in a zone where, in fact, we've gone from $90,000 to $96,000 to $97,000. As we can see here, and we could have a retracement, a breather, a whale taking profits that could be looming. So indeed, some cryptos may seem to be performing well today, but that absolutely guarantees nothing for what's to come. We'll also look at an article at the end of the video that perfectly illustrates why this trend in terms of caution when choosing your investment. And it simply remains essential. And if sentiment is already shifting into greed, what we call greediness, it means there are definitely forces behind this movement. We're going to take a look at that right now, because one of the most obvious reasons is the massive rotation we've seen this week between traditional markets and the markets, cryptos. Because while US stocks are taking a hit, with the Nasdaq down 1.4%, the Dow Jones down 1.21%, and the S&P 500 losing about 1%, meanwhile gold and silver have seen their value triple in just a few weeks. But Bitcoin, on the other hand, is doing exactly the opposite, as you can see on the chart here. And we're not going to complain about it, because before it was the other way around. With the S&P 500, the Nasdaq, the Dow Jones, gold and silver benefiting instead. And now it's finally Bitcoin that's taking advantage of this. So in absolute terms, that's $130 billion that have been added to BTC's market cap, and about $190 billion for the entire market. Crypto. By the way, the total market cap has recently been climbing to $3.30 trillion. In other words, we can clearly see that money is moving out of assets perceived as safe and into other assets, a little bit riskier ones. And this signal is quite powerful, because let me remind you, stocks themselves are at their all-time highs. And Bitcoin, on the other hand, is still down 23% compared to its peak, which was at $126,000. So the market gives the impression that it's lagging behind stocks and that it has much more potential to catch up. Now, it's still too early to confirm, but it seems that risk is starting to pick up again. Before I tell you a bit more about the bombshell, about the ultimate race, let me remind you that Crypto.com has just launched a brand new feature called Level Up. And honestly, it's actually pretty good. I'll tell you about it. The concept is quite simple. Take your wealth to the next level. And Level Up is a program in the app. It's a premium program in the Crypto.com app, which combines powerful financial tools with everyday benefits. And it's not just for traders, it's also designed for investors. So what does it include? There are different plans here. You get cash back on your spending, 5 to 6% depending on your region. You get free Netflix and Spotify subscriptions included. And above all, you have zero trading fees on the platform. And that's huge, because as we know, fees and spreads are the heart of the matter. It's super important. And all that for just $30 a month. If you trade a lot, it can really be worth it. So basically, you save not only when you invest, but also when you spend, when you do your shopping, when you watch Netflix, and when you listen to Spotify as well. In short, on things you do every day. So why not save on that too? So if you want to check it out, especially since right now there's a 30-day free trial. And on top of that, they've launched an affiliate program where, depending on different tiers, you can get more or less in bonuses. And by the way, you can get a $65 bonus through my link, which I'll put in the description. But let's keep going a bit further, because we also have a new decision from the Supreme Court or actually even a non-decision, because while the whole market was waiting for the verdict yesterday and even today on the famous legality of the tariffs imposed by Trump, the Supreme Court, once again, nothing has been published. And this is the second time in a row that the verdict was expected, but it hasn't come. So this kind of silence creates a rather peculiar context that we can feel a bit in the market today, even though it's reacting fairly positively. We can take a look at the 1 hour chart here. Even though there was a bit of a small dump, there was a rise at the opening of the Wall Street market, and then a small dump to 95,000, even 95,400, and now we're close to 97,000. So there's quite a bit of volatility in the market, but as I was saying, the United States has this famous sword of Damocles hanging over their heads because they might, or at least they may have to pay back potentially more than $200 billion to importers if the current tariff structure is allowed to continue. And if so, Trump's entire economic plan would have to be urgently reconsidered. So this uncertainty, in fact, it inevitably and obviously influences the markets. And the longer a potential major event like this is delayed, the more investors speculate and the higher volatility rises, as we've seen in recent hours. And now we move on to a rather unexpected turn in the American regulatory battle, because we have Coinbase, which is officially withdrawing its support for the bill on crypto market structure. Whereas 24 to 48 hours ago, they were rather positive. So yes, Coinbase, which is the symbol of pro-regulation compliance, has just said that the current text is worse than the already chaotic situation we know. This isn't necessarily good news, but we have Brian Armstrong, the CEO here, explaining that despite bipartisan efforts, the new draft version presents major problems. In fact, there's an almost total ban on tokenized stocks, which would actually kill off the entire RWA dynamic at its core. And this is even supported by BlackRock, even though it's one of the most promising sectors. Then there are clauses in this infamous draft, this so-called anti-DeFi draft, so anti-decentralized finance, that would require the government to have unlimited access to financial data on-chain. So it's a huge step back for privacy. And so the text would also significantly weaken the CFTC by placing it under the authority of the SEC. So it's a major blow to the balance between regulators. Each should have its own role, which is completely different. And finally, there are certain proposals aimed at eliminating rewards for stablecoins, which would clearly amount to protecting traditional banks by stifling competition. So Brian Armstrong actually remained quite diplomatic here, but he was still clear that the project is unacceptable. And according to him, it would massively hinder innovation rather than provide the clarity that has been awaited for years. And the reminder here, which is important, is that crypto must be treated equally with the rest of the current financial system. It must not be penalized. We'll wrap up this section with a figure that clearly dampened the mood as well. I mentioned it to you briefly yesterday, but it's the well-known November PPI that came out at 3%. And that's above the expected 2.7%. And that's not all, because the core PPI also climbed to 3% when it was supposed to stay below that. So basically, what does this mean? It means that producer inflation is on the rise again. And so it's the first time since July 2024 that we've seen such a surge. And since the PPI measures prices upstream in the supply chain, it's often a leading indicator. And if production costs rise, consumer prices usually follow a few weeks later. As a result, the markets are suddenly reassessing the chances of a much more aggressive pivot. So with this kind of data, actually, the Fed won't cut rates in 2 weeks, and the pause is now almost certain. And for us on the crypto side, it reminds us that macro factors are still calling the shots, even if Bitcoin is outperforming and confidence is coming back. We also have inflation picking up again, so that could create volatility and actually limit inflows into risk assets. And here, it's not a catastrophic signal in itself, but the battle against inflation isn't won yet. I had to tell you about that too. Let's move on to a very important point, which is the current structure of the market, because Bitcoin is right in the middle of what we call a deleveraging phase. And according to Coin Bureau, here, the open interest on Bitcoin has dropped by more than 30%, going from 15 billion in October to about 10 billion today. So in other words, a huge portion of leverage positions has been wiped out. This is the kind of movement we typically see in bottom zones, with the market purging itself and overly aggressive positions being forced out. And these are generally the phases that allow for rebuilding a much healthier base for what's to come. But be careful, because deleveraging doesn't mean that everything is over. Because if Bitcoin were to fall even lower, which isn't the case for now, but there is still leverage left. There is leverage that needs to be cleared out. So the market isn't completely safe yet, if I can put it that way, but it's clearly in a stabilization process that historically often precedes bullish reversals. Before we continue, if you have any metrics, information, or elements that you want and would like to see added to the daily update, please don't hesitate to let me know in the comments. Because this is my daily update. It's my way of seeing the market, my way of analyzing and breaking it down. I go over certain indicators, on-chain macro geopolitics, but maybe I could enhance and improve the daily update even more. So if you ever want me to include some metrics, and we're actually wrapping up this daily update with a statistic that seems almost unreal. I think I haven't shown it to you. I hadn't prepared it. It's right here. Quite simply, and this sums up the mood of 2025, 11.6 million cryptocurrencies already disappeared last year. We're talking about 11.6 million out of roughly 80 or 100 million. So it's an absolutely crazy number that was published in the latest CoinGecko report. By the way, I think it's currently being sold and valued at $500 million. So maybe we could create a CoinGecko together. But this figure alone represents 86% of all cryptocurrencies that have died since 2021, which is an increase of more than 700% compared to the previous record. And the reason, what is it? We all know it. It's the meme coin craze. That is to say, there were launches one after another. There were instant pump and dumps, and we had an extremely volatile market that turned these so-called projects, if I may say so, into dust overnight. But paradoxically, actually, this bloodbath isn't necessarily a bad thing in itself. It's a market cleansing, maybe even a kind of natural selection. And when all these empty shells precisely disappear, it makes room for, and especially draws attention to, serious projects with real fundamentals, with an ecosystem that's much more solid. In short, for those who are actually following the market, it's actually pretty interesting. As usual, the lesson is simple. In a market where over 11 million tokens die in the span of a year, FOMO is not a strategy. It's the fundamentals that often survive. I also wanted to mention that on Kojo, you can get the full summary of the daily update in advance, which you can access. You have all the elements I mentioned in the video directly on Kojo. And in addition to all the features we've seen together, you even have my different charts. You have my chart here, which you can access directly along with market analysis. Don't hesitate. I'll put the link in the description for you. This was Julian. It was a real pleasure. And then we'll meet again tomorrow. Tomorrow's Thursday. Yes, I'm a little lost. And even a lot. Jet lag. We'll meet again tomorrow for another daily update. Don't hesitate to show your support by leaving a like or a comment, and also by subscribing if you haven't already. Thank you for your loyalty, and I'll see you very soon. You can also find me on Instagram, Telegram, the newsletter, and Kojo. Anyway, ciao.